Hey guys, Dennis Sepulveda here, and today I have my good friend Karen Gibbard back with us from Gibbard Group Financial to talk about mortgages. There's been a lot of changes lately. First, Karen, how are you doing?
I'm doing great, Dennis. How are you
You're great.
doing?
I'm doing great. Thank you so much. Thank you so much for taking the time to talk to us. So I wanted to talk to you about the stress test because I know coming up in April we had spoken before about the changes that were supposed to be coming to the stress test, and I've heard things aren't going to quite go as planned. So can you just enlighten us as to what's going on with the stress test?
For sure. So maybe what we'll do is we'll backtrack a bit just so we can kind of get the time flow of everything.
Sure.
So originally, the test rate came out, and it's an artificially high interest rate used to qualify people for their mortgages.
Right.
And and it's set by the Bank of Canada, and we were looking at a 5.19% stress test rate.
Hmm.
So then the government was wanting to have a formula that was more responsive to the current economy when it comes to this stress test rate. So that's where the April 6th date came in. They were supposed to change the formula, and it was going to be whatever the weekly median of the insured 5-year rate is plus 2%. So at that time, at the current rates, it would have made that stress test rate about 4.89%,
Right.
and supposed to increase borrowing power by about 3%.
Right.
So now, amid the COVID-19 outbreak, the government has scrapped it. They have just
Oh,
gone back to the original one, and that's where the Bank of Canada sets the stress test rate,
yeah.
and and it's on hold and suspended just for now. We'll see what happens.
Right. Like everything else in the world right now. Um, yeah, so I know a lot of people were counting on the easing of the stress test because that extra little bit, that 3% is really, there's some people that are just out of reach to get it, especially in Vancouver. That's such a competitive market. That little extra is just going to bring in so many more buyers. So yeah,
Silver lining to this, even though we've lost that new formula that helps with um, with the buying power, because the key lending rate dropped so much. So did this rate. So did the benchmark rate. So instead of it being 5.19, it's 5.04. It's not much, but at least it's something that will help purchasers increase their borrowing power just slightly.
okay, so that sounds like there's a small relief for people. Do you know if there's any talk of the banks planning to pass along any of the savings from the cut in the interest rates? Have you heard anything at all that we can get excited about, or is it not? They're just going to keep everything.
Well, you're asking me a big question. I've got some personal biases on this. The fact that we saw the prime lending rate drop so much, and the variable rate mortgages, there's always like a discount off the variable rate mortgage. So it's usually prime minus something.
Hmm.
Well, it was around the prime minus 60, prime minus 70 range. And then once we saw the prime lending rate drop and the rates changed, we saw the amount of that discount on the variable rate disappear. So instead of it being prime minus something, it's either prime, it might be prime minus zero point 0.5,
Hmm.
and in some cases it's prime plus something. So to me, I feel like that's a bit of a money grab, and it could be their cost of funds on the variable have gone up as well. I mean, that's why the fixed mortgages have gone up, because the bank's cost of funds have gone up.
Yeah.
Just find it that one I have a hard time with to and I'm no economist by
Yeah.
any stretch, an absolute personal opinion. I just question, is this a little bit of profit making for the banks at this point on the variable rate?
Well, the banks are very good at making profit. That's what they do. So,
True.
well, I think they're going to have to at some point. In my prediction, and based on what I've been reading, is that that we're going to see a little bit of the dip in the market. There's going to be fewer buyers and fewer sellers. But if the banks pass on some savings, lower the interest rate, then I think by the end of the year we'll be back to where we were at the start of this year, or maybe even above. So that's my prediction. There's going to be a small dip for sure, just with what's going on. But as soon as things get back to normal, then we're going to see a climb back, and the government needs to help us get to where we want to be, right? So
Right. I agree with you 100%. I think it's a consumer confidence thing.
yeah,
Our office is nuts right now with phone calls and emails with people wanting to get pre approved. Maybe they have more time because they're working from home and they can actually focus on this stuff now. But
yeah,
we are seeing a huge amount of activity right now. We're expecting that to drop off in the next little bit. But I'm fully confident that once we get through this and the economy takes back off again, that we will probably make up for this little dip plus some. And it happened in 2009 in the mortgage industry as well.
Yeah.
We were down a couple of months. But after that, when the floodgates opened and people got their confidence back, we had the busiest year ever.
Yeah.
So
I
I'm
think,
pretty
uh,
positive about
I
this.
think that's exactly what's going to happen in a lot of industries. Everything, it happens in every recession. It goes up and then it comes back with a bang, and it always goes higher than what it was before. And personally, I've been quite busy this week. So quite surprising. I've been doing virtual meetings with several clients, buyers and sellers. So people are reaching out to me,
Excellent.
which is, yeah, it's kind of shocking, but it's people are just wanting. I guess they're wanting to take advantage of the market. So yeah, it's been great.
Right. Well, with technology nowadays, you can pretty much do everything, right up to signing at the lawyers online and by this kind of a meeting or email.
Yep,
So we're in a new world, and this is
absolutely.
all to step up and do business differently.
Yeah,
But
I
it's
mean, it's like any business need to adapt or die, right? So, the market
yeah,
changes and you need to adapt immediately. So I immediately got on Zoom, like what we're meeting here. So I'm doing meetings face to face, and I do, use DocuSign. So when I'm meeting with a client, or do all signatures via DocuSign. When we go to showings, we're doing private tours, and we wear gloves, masks, have the
right.
Purell, we have everything. So very safe, protecting everybody. But yeah, it's definitely doable. People are still buying and selling. I see the hot sheets every morning, and it's like nothing's happened. It's crazy.
Yeah, we're still busy. We're actually crazy busy. More
Yeah,
so maybe 3 weeks ago even.
yeah. Okay, so anything else we need to talk about as far as lending rates or stress test? Did we miss anything?
No, I think that's it for now. Obviously, we'll keep everybody updated, and if anybody has any questions, please reach out to me. But no, as of right now, April 6th, stress test changes are off the table.
Off the table. Okay, well there you go. Thank you so much, Karen. I really appreciate your time. If anybody has questions, I'm going to put her information down below. You can contact her or I anytime.
Sounds great. Have a
Okay,
great day. Good
thank you.
luck.
Take care. Bye bye.